So we're getting an interesting shift in the broader market with analysts going towards Tesla stock. While the retail investors are getting super bearish and hating the stock and Elon and the company, Tesla bears, actual Tesla bears, analysts are saying buy Tesla stock. They're becoming bullish. So in other words, while you're becoming bearish, these guys are becoming bullish. And it's for good reason. I mean, after all, when a good quality stock like Tesla drops 70 to 80% within 1 year, the company that will probably come out of this recession, okay, no, not probably, will come out of this recession stronger than ever, faster than ever, and bigger than ever, does become pretty risky to short after it's fallen this hard, and especially when it has a pricing power like no other in the industry. So it's clear as day why all these bearish analysts are now becoming bulls. Hey, that's one way to wake up, but hey, in my personal opinion, these analysts, they pretty much go what the market sentiment is. If the stock's mooning, they're gonna say it's gonna double by next week. If it's crashing down, they're gonna say it's gonna go to zero. So I would take all their advices, all their ratings with the smallest grain of salt, as you guys should with this video as well, because this is not financial advice video. Now let's get down to it. All I ask return is a like and subscribe if you haven't already. Let's go see what this analyst have to say. First, we got this nice chart from Open Skies from Twitter. Shout out to her. And if you guys aren't following me on Twitter, Curious Pejjy or Pejjy, follow me there. I'm still new to Twitter, so don't hate on me yet, but we're getting there. We're getting used to it slowly. In this chart, as you guys can see, it's literally everyone from RBC Capital to ARK Invest to even Gordon Johnson. It's mainly the big guys here. Gary Black is in here as well. But look at the positions. If you guys notice more green compared to what it was 4 months ago, well, you're right. There's more green here. In fact, from December 22nd all the way till January 18th, there's only 3 sellings here, 6 holds, and the rest are buys. Compared to what it was a year ago, from January 13th all the way to October 18th, there was a lot of sells. I mean, just look at all that sells. Still, there was still a lot of buys, but not as much as now. Overall, if we take this whole thing and sum it up, out of the 53 positions, there's 31 buys, which is like more than 50%. It's crazy. 11 holds and 11 sells. That is a sheesh moment. And as we go forward, as we see Tesla crush Q4, we're gonna see a whole lot more greens here than blue and red. Mark my words. So this was one interesting data that I want to show. The other one is Seeking Alpha. And actually, Seeking Alpha is the sponsor for today's video. Seeking Alpha is one of those platforms that I use often to see if my valuation is on the right path or not, even though I do take them with the grain of salt. Like literally, I take anyone and anyone's analysis with the grain of salt, with the smallest grain of salt, but it's good to see what the market is thinking. The reason why I like Seeking Alpha is because they have pros and they have cons when it comes to their news reports. For example, for Tesla over here, for the analysis, we can see we have articles supporting why Tesla is such a strong buy, why it's a buy here in the next one, why it's a hold, why it's a buy, and why it's also a sell here. So you guys can go ahead and read these articles and get an idea what the market is thinking about Tesla, and then you can draw your own conclusions. What's really interesting about Seeking Alpha is that they have become more bullish on Tesla stock because there's a lot of strong buys right now. But what I really like about Seeking Alpha is the ratings. Now, when we look at the valuation, it does say a D-. Obviously, I don't agree with that. I do disagree with that. But if we look at the whole sector in one, for example, Apple, they're giving them an F. Microsoft, they're also giving them an F. And NVIDIA, they're also giving him an F. But Tesla is a D-, which is, I guess, in this whole sector, Tesla is a better pick. It's a better value company or better value stock to invest in now compared to the rest of them. But you also got to understand why they are doing it, why they're giving them a D-, because they are not factoring in the other stuff that Tesla's going to be growing, like, for example, energy and FSD. And, that's for good reason, because nobody knows how much they can really generate. Everything right now is under speculation. And so they're going under what the whole industry is doing compared to Toyota and GM and just like everybody else. But what I do like about them is that they're giving growth an A. They're giving profitability an A+, which, if you look at other analysts, they're not really giving profitability even close to an A. Even though they have the best profitability in the whole flipping industry, Seeking Alpha is giving them an A+, which is a sheesh moment right there, and I do appreciate that. Now, there's a lot of data for Seeking Alpha, and we're going to go bit by bit to show you guys why the analysts are turning bullish than bearish. But shout out to Seeking Alpha for hooking us up, because you can get all this data at a premium of $119 for the whole entire year, which is an absolute sheesh moment. Pretty much, it's like less than $10 a month, or like 32 or 33 cents every single day, and you have access to all these data that I'm about to go through anyways to show you guys, how analysts have turned bullish. But that's such a flippant deal. Less than 10 bucks a month and you can get really premium data, which is not pro and it's not calm, it's in the middle. It's more neutral, which I really respect. I respect neutral analysts. Not too bullish and not too bearish, even though I'm a big Tesla bull and I do look at the bullish side. It's good to see some sources that are in the middle, and Seeking Alpha is that. So if you guys are down with that, you can sign up the link in the description and you can get on your way with this delicious premium info. All right, now let's go see how bullish these analysts have turned. Let's go. So in ratings, we have the quant rating, which we just went through. Then we got the SA Arthur's rating, which if you look at that, more than 50% of it is a buy. We got 4 strong buys, 19 buys, 17 holds, 5 sells, and 1 strong sell for some weird reason. I don't know why would anyone want to, give this a strong sell unless they're comparing it to Nikola. Not even Toyota, Nikola, Lucid. Bruh. Boggles my mind. But anyways, majority of it, 51% of it is saying buy, which is ridiculous. 40% of it is saying hold, and the rest of it is all saying sell. Then we go Wall Street Analysts rating, which is also really good. And look at that, it's a big green. It's a big 65% is buy, 30% hold, and again, less than 10% is sell. Like, why would you want to sell Tesla stock when they're down 70%? Tesla stock is not Lucid stock. It's not Nikola stock. Tesla is making money. They are the leading industry market. I mean, no one can come close to them. They can slash prices half and half again, and they can still come out with making a decent profit, and the rest of the industry are screwed. They really have nothing else to do. I mean, what, they're going to reduce prices on something they can't make money on? Come on, man. Let's get real for a second. Let's go check out their earnings, see what they're saying. They're saying beat. And the consensus is $1.12 for Q4 coming out in a couple days or a few days from now. So that's going to be very interesting to see. I really hope they beat it, which I do believe they will beat it. I think it's about 115 is what I'm saying. At the least, if the foreign exchange does hurt Tesla from the yen to the USD, I'm predicting $1.11. So if we're off by 1 cent, it's gonna be, it's still gonna be a record. Don't get me wrong, it's still gonna be a record, but the stock will take a hit, I'm not gonna lie. But if the consensus is 112 across the board, then I think they can beat it by a couple cents, in my opinion. $1.14, $1.15 does make sense to me. Then we got valuation here, as you guys can see. Look at that. It's a bad rating. I'm not gonna lie, it's a bad rating, but hey, so is Apple, Microsoft, and Nvidia. The whole industry, the whole market right now, it's all a bad valuation because of high interest rates, demand. But in my opinion, I do disagree with the valuation for Tesla. I do believe that they should be worth in the 200, 220 ranges. I think that's where they're fair, but we're on a bear market, so I guess, that makes sense. However, though, when we look at the growth side of it, just look at that. A plus, everything. Just look at that. Look at every single one of them, except for CapEx, it's C. But every single one of them is a single A. There's one BIC, 2 B's I see actually. But man, this is ridiculous. This is why Tesla in a bull market will be valued a whole lot more. This is why it will be around the 60 to 80 PEs in a bull market when it comes to Tesla. Because they are heavily concentrated in their growth. And, Seeking Alpha recognizes that. And once the whole market turns bullish, we can see Seeking Alpha turning its whole thing, saying that, it's now a buy because we're in a bull market, not in a bear market. So this is interesting to see. And we can see that Seeking Alpha is saying that Tesla is purely a growth company. So very interesting to see. Now, if we look at profitability, again, Tesla profitability, A flipping plus. Look at that. Look at that. Flawless. Flaw flipping list. Why would I want to own any other stock than Tesla right now in the recession? They've already proved that they can literally do high volume sales, maybe not make as much profit, but still make a great profit and come out stronger and better in a recession. I don't understand why this is so hard for all the bears to understand. Tesla's going to become stronger in a recession. They've done it in 2020. They've done it in 2008. In fact, the year that they become profitable was in 2020 when we had that massive crash and that mini recession. While everybody else took a dive, Tesla didn't. But I don't know. You bears are still sleeping. Hopefully one day when it goes up again another 5x. Actually, no, you guys thrive in that. You guys go like, oh, it's going up 5x, it's going to go back down. Moving on to the next thing. We got momentum, peers, options, charting, and it's just a big rabbit hole. Seeking Alpha is just a big rabbit hole. You can literally sit down and get lost in it for a whole flipping hour or two. And it's good info. You guys get a good perception on it. The last analyst that I want to show you guys is simply Wall Street. As you guys can see here, they're saying that stock value for Tesla is undervalued by 14%. Now, if you go back 3 months ago, I wish I screenshotted it, but it said that 140 to 130, that's where the stock price should be. Now they're increasing it to 155. So they're seeing the value. They're becoming bullish day by day as Tesla shows and proves themselves. I don't know why they have to prove themselves so many times over and over again. But when they show themselves that they can still cut prices by a massive margin and still make a whole lot of money, obviously, that's a big bull sign for everybody. If you look at the company overview, we can see simply Wall Street is just, look at that. They're giving a high future, strong past, strong health, which is very needed in a recession, and we are now. Not too sure why they're not giving it a strong value. You yourself are saying it's undervalued by 14%, 13.5%, man. Come on, man. How can you not give this value? But anyways, message is clear. High growth, high health, strong past. Let's click on the future growth for a second. Let's look at the future growth. 17% year over year. Give me a break. It's more like closer to 30 to 40%, man. Come on. Look at that. It's going up. And what they don't understand is that before this line here, because after that is just predicting, there's an exponential growth happening, and they're saying that it's going to be linear. They themselves are going to be surprised in the next 4 or 5 years. You can mark my words on that. But as you guys can see, just 3 months ago, 4 months ago, 5 months ago, even 2 months ago actually, where everybody was saying that no, Tesla stock at $160 per share, that's too expensive. It needs to come down to like, $80. It needs to come down to like $50. No, $20. Those same people are now saying that, wait, hold on a minute, hold up a second. No. It's a buy now. It's a buy in these ranges. Guys, maybe selling won't be a good idea. I mean, look, undervalued is, $130. I'm saying it's 150. I know I was going low between like the 120s, 110s, but look at the value. Look what they're doing. Look, maybe we looked at the wrong way. Maybe we had our head too far up our ass to see, what's going on. Guys, the shift is happening. And as Tesla moves forward and crushes earnings, which will happen in Q4 in my opinion, or even if they don't crush earnings, it's a record for them. Who is doing record in this recession? GM, Ford, Toyota, Honda, and Mercedes? Come on, man. Give me a break. But the shift is happening. All the bears are now slowly waking up and saying, hold up a second, Tesla stock at this price, valued at this price. Okay, if you start to add in the other things that are happening, like now the energy is getting a whole lot of heat now. They're booked until end of 2024. They can do this much profits, this much sales. Now we got the FSD coming online, and they're being wide released, and they're making extra revenue, extra profits for every car they sell. Even though if they do sell it at a cost, they can also sell this as well. Hold up a second, something is up here, and yes, something is up. It's actually been up since Tesla. That's their goal, bro. That's their flipping goal. Sooner or later, and I mentioned this multiple times, Tesla, the vehicle itself is like a toothbrush. You can use it to brush your teeth, and it'll be nice, it'll be cool, you'll get the plaque out. But the FSD is the toothpaste. I know there's better analogies out there, but I'm just trying to make a point here. If Tesla decides to sell their vehicles at cost, then they got other things like FSD to slap on that. Whether it's monthly or a one-time fee, they still gonna make big boots of money, man. Loads and loads of cash. It's just ridiculous how much cash they're gonna make in the next 5-6 years. I mean, I could see it. The bears don't see it, but I could see it. And that's why, folks, that's why I'm going all in into Tesla stock, because I don't see any other company that can grow as fast as Tesla at the moment, who can, provide this much profit as Tesla at the moment and come out of recession stronger, better, and faster, and, more powerful. I just don't see it. I just don't see it. I'm sure there is. Like, I know one, Taiwan Semiconductor, but that's a big, big, big risk coming from China, and I really don't want to be part of that. But if I was diversified, I would definitely be holding that stock, because it's a very good stock if you remove all the macro environments out of that. But other than that, Tesla is the only one that I can see right now that can grow. It's not Amazon, it's not Apple, it's not Google that's gonna grow massively in the next 3 to 4 or 5 years. But let's slow down for a second. I know we're in it for the long term. I hope you guys are in it for the long term, at least for 6, 8, 10, 12 years, because that's when you're gonna make a whole lot of boatloads of money, man. Not financial advice, but check out my Q4 earnings EPS prediction. Support the channel by becoming a channel member or getting some merch like the Go All In t-shirt and the poster. And don't forget to subscribe, and I shall see you guys in the next video. See ya.